Couple of things. There's a number of issues that will be on the ballot. We have the opportunity with a supermajority vote to place items on the ballot for this November. One of them is going to be an increase from $50,000 to $75,000 for your homestead exemption. So if that receives 60% or more of the vote, so please, everybody should be voting for that to get an increased exemption on homestead. Insurance, depending on who you're listening to, seems to be stabilizing, but the discounts that we were all sort of promised by other certain bills and measures have really not taken effect. We'll be looking to increase the stress test and the capital requirements for insurance companies and to be able to actually put mitigation credits towards a number of insurance policies. I know that my constituents, just like I do, have suffered nearly 300% increases in property insurance rates for underlying buildings. I go on and on. One other good thing for those watching, you can write this down and obviously contact our office if you don't have the opportunity. The My Safe Florida Home program, which has traditionally only been for single-family detached homes for wind mitigation, inspection, and hardening, is now available. It's going to be available beginning July 1st for condominiums. It's a very big deal. It's up to $175,000 per association, up to $1,500 per unit, and it's msflh.com/condos. I just want every condo association to get on that list. We need to be able to have that money committed so we can re-up it next year or get an increase. The problem lies in the fact that those large companies have a certain criteria and best practice of the way they do business. The State Farms, the Allstates, the Progressives, those companies, they cannot and will not compete with entities that I can start up with someone here and the member of the audience for $15 million, which is rather de minimis amount of capital for the exposure you're going to be assuming. Go ahead and issue premiums and policies to people, and then have 3 years of no storms, distribute all of that income as distributions, capital distributions to the partners, and then leave nothing in the LLC. So when the storm does hit, you claim insolvency and then ask FIGA, which is the state program, to bail you out. And that's basically what happened. All of these companies that you see that have gone out had 7 to 10 years of absolutely no payments out whatsoever, but then they basically get to claim insolvency in the LLC at the end. Those companies using best practices will simply not compete. So that's why we want to increase the stress test and the capital requirements for companies. We want to tap into some of the CAT fund. We have $12.7 billion in catastrophic fund available. We should bring that down when insurers are claiming that their largest expense is reinsurance. And basically, this is what that means. Any one of these condos here along Collins Avenue, they're going to have an insurance policy that has a deductible. That deductible, to get Fannie and Freddie approval for those mortgages, really cannot exceed 5%. Goldman Sachs last week came out and said they'll go up to 10% on a deductible. But really, you have your deductible, then you have that first portion of loss, and then you have a whole basket inside of that building that it may appraise for, which is required under Florida Statute 718 to get an appraisal, and the insurance company is going to give an appraisal on that building to which you have to be completely insured for. Practically speaking, you're never going to be tapping the upper levels of that amount. You can have storm surge of 50 feet. It's not going to go above the 6th floor of any one of these buildings. You can have wind-driven rain damage to 10 units on 3 floors. It's never going to be tapping that upper level. And yet that upper level that we're never hitting is proving or demonstrating to be some of the most expensive insurance to place. And I think that we could use some compression and some allowable funds and resources to be able to do away with that.
Thank you.
Is there anything that is coming up to alleviate some of the assessments that I'll say elderly, but it's more than the elderly. I know that there's some county resources, but is there something from the state that can be expected?
And yes, we find ourselves in a perfect storm where interest rates are 3 times what they were when I first filed the bill, that labor and materials are 2.5 times what they were, but we are where we are. And I think Mayor, that I will just not allow things to go at the risk and the safety of people's well-being. Having said that, there are plenty of financial institutions that will now lend. That same 80-year-old widow that we're talking about on a fixed income, 99% of the time also has 100% equity in their unit. So while they may not have on a fixed income or Social Security check the income to satisfy a loan instrument, they certainly have the equity, and there's plenty of banks that are now willing to loan based on the pledging of the association fees or the equity in that unit. And here's effectively how it happens. This is like what I want to do with septic tanks in cities that have it, not yours. But effectively, it's basically a lien or a loan that's not called and it's not accelerated until there's a transaction. The unit sells or it's devised because someone's deceased. And that's for the health of the building. And I think that's really plausible. There's a lot of equity in those places that don't have the
The
income.
next,
I will comment on a couple of things that I walked in on from the senator that had made something of an update. I just want to clarify a couple of things. You had asked if there's any state participation for helping people with their costs. And there is. There's mysafefloridahome.gov, which goes active on July 1st. And that is first come, first serve. And it is a grant of $10,000 per individual, per home, also applying to condominiums, working with your HOAs. The point of this is that we are going to harden our homes and our buildings. We've also secured record funding to address infrastructure needs. We have 40 years of deferred maintenance and improperly managed private entities. And we are aggressively taking steps to clean out the bad actors, give you the tools you need to go after them with state-funded participation. The DBPR will be fully funded. It will be finally a force to be reckoned with. And we are going to clean house, and we are going to make costs lower, and we are going to be an insurable market once again. With the mysafefloridahome.gov from last year, we've already had several private insurance agencies coming back to the state. So it is working. It's not an overnight plan. There's no magic wand. We've got a lot of catching up to do. I do want to address the assessments. That is something that's scaring a lot of people, especially people who might not have the sophistication to understand the writing, and it gets scary. Those assessments are not all due now. The assessments are for the life of the intended product. For example, if you have a roof that has another 15 years of life to it, you have to start, not this, but the following year, to start paying into a fund payments so that by the time that 15 years is up, for that one item, you can replace it. And it goes individually for all the other products that you have to address. So I don't want anyone scaring any of our residents.